Hello everybody, Mark Schaftlein with you, and this is the Schaftlein Report, Tuesday's edition, broadcasting from rainy, floody, windy Irvine, California. Happy to have you with us today. And folks, you can see by how I'm looking, it is torrential rain out here, 30-mile-an-hour winds. I had no choice. There's nothing I can do. Hey, listen, we got a great show on tap for today, particularly for you market aficionados out there. I want to welcome back a previous guest who is wildly popular on the show, Dutch Masters from Carnivore Trading. Hey, Dutch, happy to have you back on Schaftlein Report today.
Great to be here, Mark. Good to see you.
Yeah, I got to tell you, it was really great to see you. Dutch, there's a lot going on in the markets right now, a lot of cross currents. The timing of you being on the show today could not be any better. You got a Fed meeting going on right now, today and tomorrow, the implications of which are going to be astronomical for investors going forward. Dutch, tell us a little bit about what Carnivore is doing in these choppy markets, and give us your thoughts on where the Fed is and how you think they may proceed with interest rates in their two-day meeting.
Well, I'll start first with what we think the Fed's going to do, and then I'll tell you what we're doing to make money. The Fed, look, we think that since Jerome Powell has job security now, he can kind of run his own show, do his own thing, doesn't have to pander to anybody. And we think he doesn't really, necessarily, he's not going to necessarily need to listen to the pressure. He's going to get a lot of pressure to do this or that politically to kind of prop things up and prop the market up. We don't think he cares about that anymore. This is his last run here. He's got 4 years. He's going to look at his legacy. And right now, the legacy is that he's let inflation get out of control.
Yep. And
that is going to be his primary concern, is to be able to come back and say, on my watch, I did this, this, and this to rein it back in. Now, markets be damned, frankly. The bond market has corrected, months ago to bring rates up, and we're hovering around 1.4, 1.5.
Right.
Equity markets usually lag the bond guys. The bond guys are wicked fast and super smart, and they price things quickly. The equity guys sometimes take some time to come around to realize that, okay, wait a minute, we got rising interest rates coming. We've got a lot of inflation here. We got other problems out there. The way I characterize it, Mark, is that the market indexes are at close to all-time highs, but since they're market cap weighted, we have a situation where if you've ever built a sandcastle on the beach, and your sandcastle is a 3-foot tall sandcastle, and it's wonderful, and the tide's coming in and the water is eroding underneath, eventually the sandcastle will fall, but you don't see it for a long time until it's too late and boom, it falls. So that's kind of what we have with the indexes. They're the sandcastle that's sitting up there. It hasn't toppled over yet. A whole lot of stocks underneath those top 10 market weighted stocks that are propping that index up have corrected 50 to 80% already.
Yeah. Right.
It's been a really brutal 2 months.
Dutch, you hit on the key piece with which I wanted to talk to you about, and that is the underlying weakness in the overall market right now. I mean, investors are looking ahead. They're seeing the inflation. They're seeing the Fed is not even telegraphing. I mean, they are going to reduce their bond purchases, and it looks like, again, reading the tea leaves, that the bond buying will end in March. It should have ended a long time ago, but they carried it on way further than they should have. So now it's time to pay the piper, if you will. Dutch, with all the carnage that you just described, and it's not just confined to the technology sector, where some of the cloud names, some of the infrastructure names, the meme stocks, et cetera, 40, 50, 80% in some cases. And yet Apple, up until 2 days ago, was sitting at almost $3 trillion. Microsoft, $2.6 trillion. I could go on. Amazon, Google, Facebook, Tesla.
Yep.
Tesla's been slaughtered over the past week.
Yep.
Talk a little bit about, again, Carnivore, your trading company. You're giving advice to investors across the globe on how to navigate this market. But elaborate a little more on what we're talking about here with these super mega caps and their outsized influence on the index compared to the overall, say, S&P 490 stocks?
Yeah, actually, the 10 stocks have been propping it up. That's where they've been running and hiding. We've seen this before. Okay, I've been on the street for 30 plus years, so this is where they run and hide when they see sort of a tough events coming, or a tough market coming, or something worse, like some kind of a crack or a crash or a correction. So this is where they run to hide. But eventually, I kind of call it like I used to tell my team, yeah, you can run and hide there for a certain period of time, but you can only stack so many sandbags up against the Mississippi, and then it's gonna breach, right?
Right.
So today today it's interesting that we're on today, because today's the day that we started to see the castle lean over. We're beginning to see Apple, Microsoft, Google, all the rest of them roll over today. Now, imagine if those guys drop 10 or 15% from here, they're going to whack other stocks 20 or 30 or 40% from where they are. There are great companies out there. We like CFLT and AFRM, and they're great companies, but we can't buy them.
No.
They're just, every day they drop 5 points.
What's a firm trading at? 30 times 2025 sales or something like that? I mean, Max Levchin's a brilliant guy, but the way this stock is priced, I mean, come on.
Well, that's what I'm saying is, I looked at it yesterday, day before yesterday, it was 120, 119. Then the next day it's 105. Today, I don't even know where it is. It's probably at 100. I mean, these things are just dropping, every single day, every tick's down. So the real question is, what have we been telling our Carnivore family all over the world, our thousands of subscribers? Okay, Carnivore Trading's family has been, first of all, we kind of called the top around November 2nd. I actually put out, I was half joking, but what I said was, on November 2nd, we wrote out in our market wrap at the end of the day, I think we ought to all just sell everything, go to cash, and go on vacation for the rest of the year. I was half joking, but it turns out that was actually the exact day we should have done that, all of us.
Right.
So, but here's what we're doing. So we started strapping on some triple inverse index on the S&P. So the symbol's SPXU. We started buying the SPXU. So when the market goes down, that goes up. We started hitting that in the 12s. Then we added to it at around 13, and it's now, I think, clearing 14. We added to it again today. We're making it a bigger and bigger part of the portfolio. And it's an interesting little play, because what we're doing is, by having a large hedge position on like that, as the market's falling and giving us better and better pricing on stocks that we want to own long, the account's staying even to up a little bit today, and it allows us to go in and dip in and buy some of those great companies, and kind of not worry in a way about the fact that they might peel off a little bit more. We're not being aggressive. So today was SPXU and Pfizer. And the other stocks we've been putting things into the last week has been anything that's in the home building and home building ancillary trade. So Trex, all right, great company, great, they make the new decks. So I don't know about anybody else out there, but years ago when I bought a new house in Atlanta, Georgia, I had this big wood deck out there, and every summer the damn thing would crack, and I'd have to sand it and revarnish it. So Trex put an end to that problem for all of us guys, and hey, they took over the world there. So they also make boat docks and everything else that's just fabulous. So
isn't that the truth, Dutch, that there's a lot of good quality, low PE multiple value stocks that are available to investors if they just open their eyes and get away from the Nasdaq 100 for 30 seconds?
Oh man, that's true. That's true. So you got Trex, and then you got Builders First, BLDR. We bought that. Those two are ancillary home building trades, and they have incredible relative strength here. And, as long as we're going to have inflation, I know we're going to get to a discussion about inflation, but when you have inflation, people buy houses, they buy Ferraris, they buy Picassos. And I mean, I'm telling you, I live here in Newport Beach. You do too. I mean, look, I got news for you, man. There are people buying $5 and $10 million houses around the corner from me, and they don't even move in.
Yeah.
All right. They just buy it, and they're sitting on it. They have somebody come and clean it once a month and cut the lawn, because if there's going to be the kind of inflation that we see coming, they want to make money on that, on the real hard assets there. So the other thing we bought was we bought some Lennar, we bought some KB Homes, so a little bit of dusting in there with the home builders, and then of course the Pfizer. But the big one was the hedge on the SPXU that we started layering in, probably 3-4 days ago. We did do a volatility hedge trade. So we bought UVXY, which is a ETF that goes up when the VIX goes up, when the volatility goes up.
Which is happening today. Yeah.
So that happened today. So we actually bought that a few days ago, sold it today, made a nice little profit on it. So, you could argue that we could stay with it longer, but it's, we took the money and well,
Dutch, one thing about some of these inverse relationship funds, and let's get into details of that for our viewing and our podcast audience. These things move rather quickly. These tools are not designed to have you hold them 30 days or 6 months. These are designed really for 1-2 day, week, maybe 2-week trades to protect your portfolio, because some of them are 2x, 3x, meaning folks, these are 2 times, you're going to get 2 to 3 times the return on a daily basis if the market is heading south, which is what, Dutch, elaborate on that a little bit for our audience, how those work.
Yeah, so for example, our largest position happens to be Chico's FOSS. Okay, it's the women's clothing chain. They own Black Market, White House Black Market. They own a lingerie line called Soma. And of course, Chico's. They got 1,200 stores. They're cutting 200 stores. They've kind of converted to online, but we got a huge position in this stock. Okay. And it's like you say, this is a traditional kind of lower PE type of situation. People look at it, they don't understand what's going on there. We've got some, really deep research on it. That's what we do here at Carnivore Trading, is we actually get boots on the ground and get deep in research. We don't want to sell that position just because it's trading off from 6 to 5 or from 7 to 6. We don't want to sell the thing. We want to actually be accumulating. We bought more yesterday at $5.02 or 3 cents, something like that. So how do you protect yourself a little bit? The way we do that is with that inverse ETF. When you get drawdowns like this in the market, where you're seeing 600 points a day, 500 points a day, 400 points a day in the Dow, you're seeing 200, 300, 400 points in the Nasdaq. We knew the other day, remember when we had a couple of, I guess it was last week, we had basically had 3 days where the market bounced. We had like a 600 point day, a 400 point day, and then kind of a flat day. We called for that. What we said was, nothing. What you usually see when a market's trading down and changing direction is you will see a drop, and then they will suck you in. We call it a sucker pop.
Yep.
So the suckers get popped into the market when they pop this market up, because the hopefuls out there say, oh, look, it's going to go back up. And they go long again, only to have the market turn around and slam them to the mat, and they're in a loss position and trapped within a few days.
Yeah.
So that happened. And when those sucker pops hit the other day, it's kind of like an upside down saw blade, those pops that go up, those suck people in, and then it comes, then the tooth of the blade comes back down again. So we like to make things simple and draw diagrams, because I'm not that smart. It helps me.
Dutch, what's the old saying on Wall Street? The market can make the most people look foolish. I can't remember the exact wording of it, but it's basically when times like these, when everybody thinks they're smarter than the market, that's when it really can cut you up, unless you use some of the strategies that you guys employ. Talk about what Carnivore is doing for its, I'll call it Carnivore investors. They're not really investing in Carnivore, but they're your investor base. They get your daily information. They get your end of market. Talk to them about how Carnivore is communicating with its customers in these turbulent times right now, Dutch.
Well, what we do is we go ahead and we send out a pre-market report. We send out a midday report, and then we send an end of day wrap up. It's we call it the world famous market wrap. And we started calling it that when we had like 4 subscribers, and we thought it was kind of funny.
Right.
So but you know, along the way, in the middle of the day, if we do a trade, you get a notification by email and text, and you get an email and you get an email, you know, and a text of anything that we're trading. So if we're going to move in and buy some more Pfizer, if we're going to move in and buy some more of the hedge of the SPXU, which is a triple inverse on the S&P 500, you're going to get a text and alert on that. And you know, we've got subscribers all over the country. I've got great guys who are cowboys. They're out on a tractor somewhere. They get a text and boom, they use their phone and they make the trade, and then they go on plowing the ground. And I talk to these guys all the time. I love these guys. I love our Carnivore family. So we give them the live real-time trades that we're actually making right now. That's the key to this thing, is that we share exactly what we're doing in real time. Then at the end of the day, everybody reads the market wrap. And the market wrap that's the solid gold, because that's what gives you the reasoning behind the trades. We give you price targets, time frames. We have all our proprietary software. We also have everybody else's software on the planet. We listen to a couple of guys that are great traders, and what they're doing, and seek sort of to, you know, so we're all over the street. And the great thing about us is that we got so many subscribers around the world that, like, if we want to look into what's going on at Chico's, okay, I'll just put something out in the market wrap to the carnivores, and I'll say, okay, anybody who lives near Chico's, I want you to go in there. I want you to talk to them. I want you to talk to the sales associate. I want you to find out, do they have all the sizes and all the shoes? Are they out of anything? Are they having supply chain problems? How's the customer traffic? Sit there for half an hour, count the number of people that come in the door. I mean, all that crazy stuff that, you know, that's deep stuff, right?
It is deep, very deep stuff.
Yeah. And so, you know, then we go online and we check out their online stuff, and we find out, okay, how many sizes are they out of? This looks like a popular shoe. I know it sounds kind of weird, but we do this stuff. Then they all report back to me. They all send me, I get emails. I got emails with people in front of the store. I got emails. I got videos of people talking to sales associates. Okay. I mean, this is like amazing. I never thought, I thought maybe if we got, you know, big enough that we might have kind of an edge on getting some deep research. I didn't think this would happen. This is really cool.
Well, you've got an army of investigators out there basically employing hedge fund tactics without having to pay the multi-million-dollar salaries that some of these hedge funds are paying. And the reason your clients, your carnivores, are doing this is they love what you're doing for them. I mean, Dutch, one thing I love about you and your company, you're giving real-time information to people doing your own trades, and they're buying into the same stuff you're buying, and they're saying, hey, these guys are really good. And like I've always said, some of the best traders on Wall Street, if they're right 75% of the time, they're going to put them in the Hall of Fame. Okay, you guys have some wins, some losses, but at the end of the day, you have enough people successfully following your trends to where, hey, guys making me money, it's almost like I want to give back something to the team to help my other carnivores out.
Yeah, that's what I tell them. Is I say, look, we all help each other here in the family. And, you know, like when we were doing that marine shipping trade back in 2020, we started to see the ships stacking up off the coast here, you know, in California. And I jump on the motorcycle in the middle of the night. I go up there to the Long Beach docks, and I go down. And when you're on a motorcycle and you look like I do, and you know, if you're wearing the right clothes, the leathers and stuff like that, you look kind of, I'm a big guy, so I probably look like a longshoreman or something, right? So so I go up there on the motorcycle, and there's a security gate, and the guy says, what are you here for? I said, I'm looking for a job. I got to meet with Joe over there at the shack. And he says, okay. And he just lets me through. That was awesome.
Yeah.
And so then I go find the guys, and they're all sitting out in back. They're having a cigarette, and they're, you know, having their coffee and stuff. You just sit down with them and you start talking. Okay, how many containers coming in today? Well, what's going on? Are you guys working 3 shifts or 2? What's going on? And this is the kind of stuff I just love, because then you find out the truth, right?
Yep.
Then you find out, yeah, we don't have enough space. We're running out of space for containers. So we were real early in that trade, had a great time riding that thing up. And so that's just sort of kind of the carnivore way of doing things. Well, once I did that and I shared that with the carnivore family, I started getting pictures of people at ports all over the country.
That's amazing. That's a credit to you, Dutch. I'm so happy. Folks, that is the type of research, real research. You don't listen to these BS people come on Fox Business, CNBC, Bloomberg, et cetera, telling you this is real life stuff that's going on. And when you're getting the information before everybody in the mainstream media or the cableverse has it, that's the real value of the information that you're getting, Dutch. Hey, let's talk about a couple controversial things here. Let's talk about crypto and its outsized influence on this market, because it's become a multi-trillion dollar market right now. Almost seems like out of thin air. There are some people on Wall Street that think it is zero value. I mean, they think it's a complete scam, and that the crypto people have figured out a way to take money from unsuspecting investors. Not all. Some very, very wealthy, sophisticated investors are big backers of this, but it's really aggressive. Bitcoin's down 30%, I think, over the past 3 weeks of trading. Elon Musk goes out and says, well, we're going to accept Dogecoin for buying merchandise through Tesla, another real winner. And people all of a sudden bid something up that has virtually no value, up 20%. What is the effect, Dutch, on these crypto collapses that we're seeing, some of these meme stocks that were bid way up that had no underlying value, and some of the SPACs that are really the heirs coming out of these things? Talk about the effect of those three things, the SPACs, the memes, and the Bitcoins of the world, on how that affects the overall stock market.
We look at the crypto market kind of as an indicator for risk assets. Okay, so what's the appetite for risk? If Bitcoin, other cryptos are the tight, it's a risk on scenario. Okay, are okay with risk assets. So I personally own zero crypto.
Same with me.
I've got partners and other people, other traders here at Carnivore who own crypto, and I've got some that because they think, okay, it's interesting, and then I've got others that are adamant followers of it, adamant believers of it, just absolutely in love with it, say it's the next best thing that's ever happened. So we kind of run the gamut over here, and we have to I have to listen to kind of like the movie Wall Street. They said you got to call Gordon Gekko. He talks to everybody. And because he'll talk to everybody, because there is no, my boss on Wall Street, my mentor, told me nobody has a monopoly on a good idea.
Right.
And so I listened to this stuff on crypto. I haven't voted with my pocketbook yet. I know a lot of Bitcoin millionaires. I know 25-year-old kids that are buying, $30 million pieces of property in Hawaii because they made $500 million by buying Bitcoin when it was $400. I see this, right? And so I can't deny that happens. Sure. I can't, and all that. But we see it. I look at it as an indicator of risk. The retail investor has we're a big fan of the retail guy. We're a big fan of the guys who pulled off what they did on Wall Street Bets. We love the democratization of trading. We love fractional share ability. We love commission-free accounts. That's where most of our Carnivore family trades, is at some outside firm because we don't take accounts here. We just show you what we're trading.
Right.
But they trade somewhere commission-free, and so we like all of that, and we like the less friction that there is in a system, the better. The problem with crypto, in my mind, is there's still a lot of friction.
Yes.
So you can buy and sell a stock and turn it into cash real fast.
Yep.
The problem with crypto is, for me to go buy some of these crypto assets, I got to open some funky wallet somewhere.
Yeah.
And I don't know. I'm just not comfortable with that. And I don't, I'm just, people tell me, well, once you do that, you can get a Visa card and you can go buy, your cup of coffee with crypto or something. I'm like, well, I can buy a cup of coffee with my Visa card right now.
Right.
So
I'm with you. Well, where I was going with this really is that, again, I'm in your camp. I sort of share that view. I'm not saying it's a worthless asset. I'm not going to go that far, although some very sophisticated people on Wall Street have gone that far. And these are people that, these aren't just 7-figure guys. These are 8-figure earners out there on the street that are saying, what in the hell are you doing? He goes, how does a crypto pay a dividend? That reminds me of the old days when people were doing Ponzi schemes and, they were paying interest on stuff. And I'm like, how the hell does something that doesn't produce income pay a dividend? I've never figured that one out yet. Kramer goes on CNBC and he says, hey, every month I get dividend checks on Ethereum. I don't know how the hell they're doing it, but they keep doing it. My question, Dutch, is does that pose any type of systematic type risk? Because of just the sheer size of it. It's like when we were talking before, Apple, Google, Microsoft, if they end up going down 10%, they're going to carry the market down. Unless you have an inverse hedge, you're not going to get around something like that. But crypto, it's $1 trillion market right now, Dutch. How much systematic risk is there with the cryptocurrencies?
I think there's a lot of systematic risk. I think that, because where are you going to go, right? So, one thing that I always learned on Wall Street was that, and what I used to tell my super large, mega large clients was, when I was working on the street was I said, hey, look, you're going to deposit $400 million with me. Okay. You just sold your company for $1 billion. Congratulations. You got to put it somewhere. You're going to wire me $400 million. You're going to pay taxes with a bunch of the rest of it. And you're probably wondering, I'm wiring $400 million to this guy. Who is this guy? And, so the systematic risk there is if I'm a crazy person and you're wiring $400 million to me and I decide I'm going to try to figure out how to steal it, your backdrop is I'm with Goldman Sachs or I'm with JP Morgan or Deutsche Bank or somebody big, right?
Right.
And so I can go and try to steal it. And by the way, when I worked at Merrill Lynch, there was a guy in Las Vegas who stole $20 million. Andre Agassi was one of his customers.
I remember that case.
You remember that one?
Mm-hmm. Yeah, sure did.
They never found that guy, or maybe they did somewhere out in the desert under a cactus or something. But, the next day, Merrill Lynch just made everybody's accounts back to full.
Right.
And so, in this kind of a scenario, if I'm opening, the wackadoodle wallet that's based in, the Ukraine, where am I going to go?
Right.
They take my money, and that's recently happened too. Was I think $2 billion or $3 billion got taken. Yeah, it's like, okay, well, where do you go to get it? There ain't no regulation on top of that guy.
Right. Yeah, that's the regulation coming. Dutch, a couple other things. Let me ask you this. This is something that's been perplexing. I've talked to a lot of noted economists that have come on our show, and you get all over the map. We're worried about inflation. You and I see it coming. It's been there. The Fed was wrong when they said it's transitory, and they put that word in the history books. But here's the mystery question I've got for you, Dutch. We're seeing right now 6.9, 6.8% inflation. We saw the wholesale rate come out today. What was that? What was the wholesale rate today? 9.6%. That's going to filter through. How in the world is the 10-year note sitting there hovering at 1.4 to 1.5 when we've got inflation expectations running 4 to 5 times that level?
Yeah, that's obviously, we can't see it, but obviously you've got the Treasury, you've got the Fed, you've got they're all working through some of their proxies like BlackRock or whatever to hold that thing down. We could turn around tomorrow and that thing, if they took their finger off of that, took their thumb off of that 10-year, that thing could be at $1.75 in a heartbeat, and then blow to 225 or 250. Now, that's going to be really bad for long duration stocks. Right. And what I'm talking about there, we're starting to see it today. A lot of these clean energy things that have no PE and maybe no E at all, and maybe some of them not even any revenue. Okay, so those guys, we actually just the other way we're making money is we're doing long short trades. So we're doing market neutral trades. It's a little more complex to understand. If people sign up for our free trial, they can get a full explanation of that tonight. But the long short trades are working out real well. You use ETFs. You can go long the home builder ETF, and you can go short the clean energy ETF. We actually just did that 7 days. We made 3.19%. Doesn't matter which way the market goes. We don't care if the market goes up or the market goes down. All we care about is that home builders hold up better than the clean energy guys. And so that's market neutral. That's kind of a nifty, groovy thing. Most investors, by the way, have no idea how to do it, don't understand it, can't wrap their heads around it. We are now working with the carnivores to get all of them on board to how to do this and to keep it simple and make it smart, because what we've told them is sophisticated, wealthy investors and institutions and hedge funds have been doing this trade since the dawn of time.
Yep.
And now it's time for you to learn how to do it so that when we get into markets like this, you can make money. We've done 6 long short trades at Carnivore in the last 70 days, and we are up net over 14%.
That's outstanding. Outstanding.
And that's during a 70-day period that was pretty brutal. So,
yep. All right, Dutch, we got a couple minutes left. Okay.
Yeah.
Wholesale prices up.
Yep.
Wage gains are not keeping up with inflation. And yet, the sign of the times here, some of the crypto's down, some of the meme stocks down 70, 80%. But investors who are following your advice, at worst, are market neutral, and at best are getting nice returns because they're following a strategy of a firm headed by you who has decades of Wall Street experience and can really get them through turbulent times like this. Close it out with us, Dutch, because what I love about Carnivore is the retail traders in Carnivore are doing well. The ones that went out there with no advice, thought they'd do it on their own, bought the meme stocks at the GameStops at 200 and the high flyers, the energy companies, the Lucids at 100, they're suffering. But your investors are not. You got about a minute. Close it out for us and give us your thoughts on moving forward.
Well, carnivoretrading.com is our site. We put a lot of effort into teaching and learning and education. We want the 50 million new traders out there to, be well armed and well informed and to get some really cool, great ideas, and to understand that you don't have to be fully invested in the market every day, that there are ways to make money in the market when the market's going down, when it's going sideways, that there are very tried and true rules of trading that protect you so that you're not going to wipe yourself out. We teach them what those rules are. We have a 14-day free trial. The reason we have the free trial is real simple. In 14 days, if you see what we're doing and what we're actually trading, and you read the market wrap every night, you will get that there is a higher level of thinking here, and that your financial advisor may not be the smartest guy on the block.
Right. Dutch, we've seen it decade after decade. I can't thank you enough for coming on today. I always love our discussions, whether we're talking inflation, economics, trading, or the prognostication for the future. There's always opportunity when you're dealing with Carnivore. Dutch, thank you for joining me today. It's been my pleasure.
Mark, a wonderful day. Stay out of the rain. I'll try to do the same.
Okay, thanks a lot. Folks, that's it for today. Good trading opportunities. Follow Carnivore. You can go to their website, sign up. They're a great company to work with. All right, that's it for today. We're going to try to stay dry. It's almost impossible here. The mountains are getting 6 feet of snow, 6 feet of snow. And we got about 5 inches of rain coming here in Orange County. Thanks for joining us today. Have a good evening. We'll be back and we'll see you tomorrow.